Let's begin by discussing the overall market at hand, looking at where crude oil prices are and the rest of the macros, the steps taken by the Reserve Bank to fight inflation. How are you looking at the overall setup at the current juncture? The fact that, at least for now, you are seeing the FII cool off a tad when it comes to the selling for one day, that was yesterday. But do you sense that we're likely to see relentless selling pressure from the FIIs?
Well, what I see has happened. First of all, today there's a rebalancing of the MSCI index, so that's going to have some effect in the market. I'm not sure if it's a positive or a negative, but I think net they'll be taking money out of the market again today. The reality is we are actually a followers market, and what's happening is that, according to me, crude is going up, and that's pulling the European markets down. It's then pulling the US markets down, and therefore, we are just following suit because, trickles from our market go back to the US or go back to Europe in a sense of trying to buy on dips. But therefore, we were seeing this consistent selling. And I think that, we've been on the top of the pile in terms of valuations for the last year or so. And now people are taking profits off the table. Unfortunately, it's come at one shot. So we're seeing a lot of money going out from our perspective. But from a global perspective, it's not that much. So those are my thoughts basically on the markets.
Pashupati, where in the country or in the world are you wearing that bomber jacket while we are melting away here in Bombay?
Cold lands. I'm not here, but I'm coming back shortly. I'm waiting for the rains to come, then I'll be here. But in cold lands. But generally, the optimism on India is high. I mean, they feel that India is a place to go, but there's still a lot of confusion about how to do it. And also, a lot of the existing players are taking money off the table because they're seeing opportunities in other emerging markets. And, look at it, if you're an emerging markets player, you'd be looking at buying on dips in China, buying on dips maybe even in Russia. So where's that money coming from? It's coming from India. So therefore, we are seeing selling and those countries are seeing buying. So that's the way it is, I guess.
Not divulging, so we're wondering which cold lands that you're sitting in, because I have a question related to that. I bet when you were traveling, were the airports packed? Was there a lot of crowd at the hotels as well that you're staying in? Because it seems that this theme is really playing up. Revenge travel is a thing.
Revenge travel is a thing, and I think revenge travel by Indians is a further thing because there were lots of Indians in these places as well. So I think people have taken the May and June opportunity to get out of India and go to cooler climes, I should say. And particularly as somebody sent me a WhatsApp which showed that Delhi is closer than Mercury to the sun. So I guess you guys have had it worse than the rest of us.
For now we are, but like you said, you'll be back in time for rains, which brings me to my question as to whether or not you're looking at any of the agri themes. Are you going to bet on, say, fertilizers or anything that, linked close to rural based the kind of projections that we're getting for monsoon back home?
Yeah, for sure. One has to go back into fertilizers because this is the buying season. The challenge, I think, that people got a little surprised about was this movement in steel because of the steel export ban and all the things that went with that. And, steel was having a great run and suddenly it got smacked in the face due to regulation. So that actually puts us in a different paradigm as to whether the government is going to tax any industry that is looks like it's doing well. And this seems to be prevalent not only in India, but all over the world. So it is a kind of watch out. So you can ride an industry to a certain level. And, then suddenly the government will put some twist on some kind of taxation on it, like we've seen today in real estate with stamp duty going up. Maybe it'll come on fertilizer too, though that's a difficult industry for them to add any kind of duties to. But the reality is they could. And I think that's part of what's going on because governments need money to pay for their social welfare programs.
Very odd stocks are popping up. You got AU Bank, you got Astral, GNFC. Jubilant, I must say that the stock has recovered a lot of its lost ground. Nalco is down, JSW is up, Indian Hotel is up, DLF is down. You don't have a trend per se, which can be called as, okay, Raymond's is up, but then you got Aditya Birla Nuvo, which has also gone down. LIC is down, but HDFC Life is up. Kunal, where is steel headed?
So I think it's still headed on the downside. I would not say that that you probably see a major sharp correction into these names, but then the lift off into these stocks or the recovery into these stocks is still a bit far fetched. There is no major recovery in terms of volumes. There is no sign of a change in the trends for open interest for these metal stocks. So I was looking at the data for the top 3-4 names likes of Hindalco, JSW Steel, Tata Steel, Vedanta, etc. And there are no major changes in the open interest. It's still an OI heavy sector to say for the metal names, and the OI trend had started to shape up higher when the stocks have actually gotten to that corrective mode, which means all those traders who have been sitting short into the levels, they are still not closing in their positions and still maintaining to their short stance into these stocks. So that could probably add as a pressure point for these metal names. You would probably expect that either the prices break out of their swing resistances, the first level of resistance. If that doesn't happen, either the unwinding has to start off for the for the sector to start to get into a turnaround mode. For example, Hindalco has a huge resistance at this 440, 445 mark. Tata Steel at closer to 1085, 1090 levels. We saw the stock rallying towards 1080 today, but then from there, there has been a mild correction. Same is the case with Hindalco as well. So these stocks are neither breaking out of their previous resistances nor a change of open interest, which sort of gives an indication that the selling pressure and the downward trend should continue for these sector.
Let's get in a handle as to which are some of the interesting volume buzzers while the index is languishing around the 16,469 mark. There's lots of stocks that are popping up on the volume charts, and we've got Pankaj who's analyzed some of those names and now joins in to give us a gist. Pankaj?
Well, let's first start with volume buzzers. An interesting one today. When markets are down, Happiest Mind is doing pretty well. It's almost 9 times, and it's not a very not frequently traded counter. So 9 times 10-day average, price action pretty strong. Dilip Buildcon, when the markets were falling, continuously fell, and today for the first time you're seeing some sort of recovery with 5 times in terms of volume. Chalet Hotel, similar story, about 4 times, and even some of the other hotel stocks have rallied earlier. So I think this is playing a catch-up role, and that's why some volume action coming in over here as well. Let's look at some of the unusual movers as well as we speak. So here you go. Polyplex Corporation, that's up about 7% Garware Wall, 6%, very high volumes. GICRE, right from the word go, has been looking in strong, up around 4%. Polyplex and some of the other companies in similar industries had, tend to, just gone on a back burner. But today volumes are high, price action is high for both these names, and that's why they do qualify for unusual movement today.
All right, thanks very much, Pankaj, for highlighting all those volume buzzers. Let's get in views on the charts then. Naresh, have you tracked any of these names? Dilip Buildcon, Chalet Hotels, or Happiest Minds?
So, Dilip Buildcon is something which I'm not tracking, given that it has been in a one-way downtrend. Chalet is the one which looks interesting in terms of the price action. So, the stock has been holding on to that 280 to 300 mark for the last 1 month or so. Did not correct in the whole correction. Would be a stock which could eventually head up towards the 370 mark or as well as into new all-time highs. So like Chalet as a say a buy candidate even at current levels, would be looking to add more at 330 as a momentum trade.
Okay, I'm just looking at Bata. Here's what's happened, and we reported this last evening itself, remember. 36 lakh shares have changed hand in multiple block deals around that 1850 price point, which is why you're seeing Bata under pressure, and that's where the block deal did happen. 1844 is where the stock is right now. What we understand is that JP Morgan was the sole banker to the deal, and that promoters, they still continue to own more than 50% in the company. Having said that, Pashupati, what I want to understand is, where does the entire consumption story lie? Yes, incomes are moving up, but so are expenses because of inflation, and just everything is elevated because of inflation. Would consumers then cut corners when it comes to stories like Bata or any other?
Well, obviously, I would say that everyone's got to balance their budgets, and it starts at the home. And if suddenly you don't need another pair of shoes, it's obviously this marginal sort of expense which will be cut off. Bata benefits because, as a large extent, it caters to the office shoe market and the more sort of formal market. So I think it should probably survive. But some of the other players may get hit. But you mentioned earlier about the travel buzz. I think travel will also come off because that's a discretionary spend, which is not required. But it's all heading for a point. And the question is, are we going to raise salaries so that the people who have the money get even more money, or are we going to say no and stop and cause some pain all around? So I think it's going to be more of the latter than the former. So I think we're in for tough times over the next 3 to 6 months.
I wonder what the take is, Pashupati, when it comes to autos, perhaps being reflected that the supply chain concerns, the high input prices are going to play a spoil sport for some time to come. Would this sector be a bit of a write-off, or would you be very selective?
Well, the thing is that, people about a month or two ago were optimistic and wanted to come and buy autos. So they put their money down to take delivery. Now the deliveries are starting to come, though the supply chain is still a problem for chips. I think that what's going to happen is that some people are going to back away and walk away, and maybe the numbers will not be as rosy as they're projected to being. But for now, everyone is smiling. But I think that, with higher oil prices, because it looks like, crude is going up, so therefore that's going to be higher oil prices. We got a reprieve because of slight drop in the duties, but I don't know if we can get another reprieve. But I think it's belt tightening time. That's my personal opinion.